Kevin Gordon of Charles Schwab and Victoria Fernandez of Crossmark Global Investments. Kevin, begin with you. You're sitting here right next to me. What do you make of what Tom Lee says? It's the bull market for sure in his mind, and it began a while ago.
Well, I think you still have a long laundry list of things that just have to be checked off, and much like you were covering and you've all been covering all week, which is, lack of participation from small caps, the average stocks, cyclicals, Dow transports, the advanced decline line. I mean, the list goes on. So I think from that perspective, objectively, you're not really in a territory that would be consistent with what we've seen from prior bull markets. So in that aspect, you're kind of making history either way. It's either the longest bear market rally we've seen or it's the weakest start by far to a bull market that we've seen. And I think just at this point, 8 months off the low, the fact that the banks are still down, small caps have barely moved. You're even giving back some of the move today in the Russell 2000. And the fact that, new highs relative to new lows on a 52-week basis haven't yet gotten in that consistent double-digit territory for the broader market. So I would just base it off of that. I don't think it's any precursor, at least the mega cap sort of narrowness in the leadership in the rally. I don't think that is necessarily the precursor for weakness. I think it's the lack of any movement for the rest of the market. If you start to see what we saw last Friday and in the middle of this week, where you get much more participation, that to us would be much more favorable. You can get much more constructive, but it's just not happening yet for the broader market.
So in light of that, Tom, let's do it point counterpoint. What's your counterpoint to what Kevin just said?
Foremost, I think at the core, a bull market isn't defined by an advanced decline line or small caps. It's historically whether or not the index is advancing. And as you know, in 2009, after the March 09 lows, there were many people, the vast majority of people argued against a new bull market starting because they said the banks were lagging, and they pointed to the internet bubble, so they didn't think tech could be the leadership, and they pointed to what they saw was very poor prospects for investment spending and a hostile government. I just think people build a case against a rising trend. I think that's probably the most important thing I would point out. The second is a lot of these things that I think are fair, like the lack of participation, could really change if the Fed signals they're comfortable with where stock prices are. So I think next week's a big moment. I can't say I know what the Fed's going to say. And, if the Fed says inflation's still a problem, I think it's going to create the bifurcation still that, we have the FANGs and we have the tech and things that solve inflation and everything else. And it might feel like a two-stage market. So I think Kevin's bringing up fair points, but those historically aren't good arguments against a bull market.
Okay, Victoria, how do you see it here?
Yeah, so I lean a little bit more towards the bearish side on this, because I think when I'm sitting down in front of my clients, I can say, yes, we've seen some positive things in the market. Now, just over the last week is when we see the breadth really come back from around 30% of the Russell 3000 above their 20-day moving average up to around 47%. That's great. We like that. But you look at the factors that are still doing well in the market, risk on and momentum factors are still lagging the quality factors, which tells me that we're still a little uncertain as to what's going on. And you have to look at leading economic indicators down 13 months in a row. And Scott, the level of change that we have seen in the LEIs, we've never had that level of change without going into a recession. We're just now hitting the time period after the first rate hike that you typically go into a recession. And there's a lot of these under the element kind of pieces that we're missing. We had the bank crisis earlier. We talked about commercial real estate. What about private lending? We've seen private lending increase significantly over the last month. Is that an area where we have to be concerned? Rising debt cost, the illiquidity that's coming, and the sectors that usually do well during those time periods are the things we're talking about that are lagging right now. Healthcare, staples, value names. So I think you can't have a confirmation bias as to whether you're a bull or a bear. You have to take it all in. But saying that doesn't mean if you're bearish, you're out of the market. We've never been out of the market, even though we've had a bearish view. It just depends on where you are within the market, and I think that's key.